Welcome to the CFS monthly webcast. It's May 5th. Happy Cinco de Mayo. My name is Michael Seiss. This is Zach King. We're going to touch on a few things that we've seen in the marketplace over the last month or so and kind of what our expectation is moving forward from here.
All right, so let's dive right into it. Last week, productivity numbers were released. Little disappointing, dropped 0.6% from the previous quarter, but it wasn't all bad news there. Business spending was up, and more recently, job numbers were released. Over 200,000 jobs were added last month. Unemployment rate dropped to 4.4%, lowest it's been in almost a decade. So I don't think we have much to worry about right now.
No, that all looks to be in good shape. We also saw a Fed meeting actually occurred earlier this week. We've seen a couple interest rate increases over the last 6 months, and the expectation is that we would continue to see more. No increase in May, but we are anticipating an increase in either June or July. It could be as late as September, but our hope is, and the expectation has been set, that it will take place sometime this summer, another 25 basis point increase at the Fed fund level, which we feel like is a great direction for the fixed income market to be moving in. So we are excited about that and looking forward to seeing where it goes from here. A couple of victories for the Trump administration here over the last couple of weeks. We saw, the avoidance of the government shutdown, I think, was a large victory for the Republican Party, all things considered. And then it was immediately followed by the healthcare bill being passed in the Senate, which is going to bring a lot of changes. The unraveling of Obamacare, I think, it's not going to be a simple fix. There's going to be a lot of moving parts there, and I think the first step has now been taken. So we should hear some more in the news here, I think, in the upcoming weeks to see exactly what the new proposal is going to look like. And the GOP actually also, revealing a little bit more about their tax proposal as well. Zach was going to touch on that.
Something to think about with all these things happening. So we should start preparing for this tax overhaul to possibly happen. We've heard some rumors of the standard deduction possibly doubling. This could affect the amount of people itemizing their deductions every year. Along with that, the 3.8% investment income surtax is in question. So this could give investors some opportunities and planning.
Yeah.
From the planning perspective, possibly if you defer some investment income to the future, 2018, if the surtax does go away, it could result in quite a bit of tax savings for the investor. So
Absolutely.
If you don't need the income, it might be appropriate to defer it a little longer. Yeah.
It's important to remember also that I think the first 100 days of the Trump campaign, Trump administration rather, is only just now upon us. It seems, I think, for a lot of us, like quite a bit longer. So that we're still, it's a very young administration. I think we're going to see a lot happen, good, bad, or ugly. There's going to be a lot of moving parts coming up, so it's important to keep an eye on it and make sure you're aware and speaking with your advisor about how it's going to really trickle down to your investment portfolio and your entire situation as far as your financial plan is concerned. As far as where the market stands right now, just a few minor concerns that we have where we think if we were to see things go in an unfortunate direction, these might be the three areas that would be most likely to negatively impact the market. That would be the unrest that we're seeing internationally, as well as these interest rates. If we were to see a turnaround where interest rates are not able to continue moving up and we saw an additional tapering of interest rates in a negative direction, I think that would cause some volatility in the stock market as well. And of course, this new administration, it's so young that there's still quite a bit of political unrest, as I'm sure you're all aware. And if we were to see that continue, of course, volatility could be sort of an after effect of that. But all in all, I think if we diversify correctly and invest for the long term, the markets offer a great amount of opportunity. And it may be that in the near term, they offer some good entry points for those of us that still have cash on the sidelines. So I think that's everything we wanted to touch on. So we want to thank you guys for joining us.
All right, goodbye.